Right now, you're in one of two places. You're either winging it or you're working for it. And today, I'm going to break down the exact frameworks of how I built a $10 million trade business in under 7 years. For the guys that are winging it, you're going to understand exactly what it takes and what is required to get there. This is going to be a deep dive into systems. And for the guys that are working for it, I'm going to reset your expectations on exactly what is required to get there. So, come along for the journey. School's in session, boys. Let's get to it. You see, 7 years building Build Clean and doing a 3-year business degree, I learned a few bits and pieces about how to grow it and how to grow it properly. We're going to start with something nice and simple here. In order to frame up exactly where we want to go and what we need to do. So let's take a look. We're going to focus really on 3 core elements today. We're going to break those down into some bigger systems and frameworks. What we have is our where. Where do we actually want to go? There's no point in scaling and building systems and adding complexity to our business if we don't know where we're going to go. Then we're going to establish the what. What do we actually need to do to get to our where? So if we were to position our where as our mission, the pinnacle of the mountain, our what is going to be the milestones and the base camps along the way to get there. And you and I both know we can't do all of this alone. We need to think about the who. Who's going to help us? Who's going to be a part of this business? What does the org chart actually look like in order to get us to where we want to go? So let's dig a layer deeper. All right, let's future pace this a little bit. We're going to put together a timeline of what we need to do. There are 6 things that we are going to work on. 1, 2, 3, 4, 5, 6. And then there's a whole bunch of little things that we can talk about later. Let's pace it out. We're here today and we want to build something close to that $10 million empire. You can tailor it how you want, but this is how I did it. So, some of the components that we're going to have to work through. We need to define what this mission is. And from that mission, that guiding star, that North Star that we're working towards, we want to break down some milestones. What are the things that we're actually going to achieve along the way to bring that mission to life? That mission is right down the end here. We're starting with the end in mind. We're breaking it up into milestones. And then we're going to look at the who, the org chart. Who do we actually need within our team to bring the milestones and mission to life? Now, this is quite conceptual. It's quite overly simplistic. And as we progress through this timeline, we're adding layers of complexity because we now know where we are, where we want to go, what we need to do, who we want to bring within the team. Then we're going to have to forecast this out. We're going to have to see what the numbers tell us. Is it plausible, or have we made some potentially incorrect assumptions in our hypothesis along the way? And once we've built a forecast, we can extract out key performance indicators, KPIs, so that we can track our performance on a monthly and quarterly basis to validate our forecast, to bring our org chart to life, to tick off our milestones, to achieve our mission, to take us to the promised land. And the final piece that we're going to work on is retention. Because one of the largest risks that I found with growing an 8-figure business was retaining the talent that we put so much time into. If we keep losing and churning the talent, everything along the way gets significantly harder. So, let's build these frameworks, shall we? Before I forget, if this is resonating with you, click the link below, book a call with one of our coaches. We'd love to get in touch and learn more about your business. Now let's get back to it. Let's map out your mission. We can draw together some pretty top-level conclusions, and you've probably got some numbers in your head of what you really want to do. So, our mission is going to be our revenue target at net profit % by calendar date. I would probably go for end of financial year. This could be end of financial year 2030, 2035, it could be 2028. And you're probably looking at this and going, well, Sam, I don't have a magic number in mind, and I don't really have a date set, but I kind of know what profit margin I want to hit. Let's unpack it a little bit deeper. And the golden question is, how big do I need to go to build the life that I want? Let's have a look at some of the patterns I see within the industry. There are really 4 tiers. There's kind of 5 if we include the startups, but that's not really who we're talking to today. We're thinking about whether we are an operator, a manager, leader, or an investor. Titling kind of sounds cool, but what does it really mean? This, as an operator, is for the guys under 1 mil. Manager is really for the guys that are, between 1 and 4 mil. For the guys that are leaders, you're really cracking that 10 mil mark. And for the investors, sky's the limit. So now we can see some revenue ranges with some titling or some nouns to put on our position or where we want to go. But what does it really mean as far as mission, people? How do I extract out the information? If we think about operators, they can generally take about 100K per year salary. For our managers, doing between, that $1 to $4 million mark, they can usually take about 190K salary, maybe a little bit of dividends on the side. For our leaders, they can get up to that 190K salary pretty easy, plus dividends. And if you're edging towards that 10, the 7, 8, 9, 10 mark, those dividends are going to be pretty substantial. What I'm doing here is unpacking, what do you want to earn? Because once we establish what you want to earn, then we can think about your ideal job. And once we know what you want to earn, and your ideal job, it makes setting the mission a hell of a lot easier. So let's think about this maybe in another layer of detail. Our operators, that's just you. Maybe 1 or 2 people in the team, but everything falls on your shoulders. Our managers, as it suggests, have a team to lead. However, they are still the head of the team. They don't have a managerial team to run beneath them and to operate the company for them. Leaders is where it really starts to step up. We have technician teams, and we have middle level managers, and then we have a big executive or executive team. So if we start to really consider what we want to build and what kind of life you want to build for yourself, do you want to be a sole trader operator? Do you want to be a manager or a genius with 1,000 helpers? Do you want to be the leader with an executive team to run your middle level management team that can lead your technicians on site? And for the investors, this is where you take yourself out of the company. So take a moment to think about which position you want to be: operator, manager, leader, and investor. And we're going to bring this back in and define that mission. All right, back to our mission. Dollars at net profit percent by calendar date. If you think about what we just spoke about with our leader, our manager, and our operator, where do you want to be? What kind of revenue do you want to hit? And for today, to keep my math super simple, we're going to work on 10 mil at 10% by June 30, 2030. We've got a couple years to build this. So to keep the math super simple for all of us, we're going to work on a 10 mil mission at 10% net profit by June 30, 2030. Now that we have our mission in place, 10 mil at 10% by 2030, let's unpack it and create some milestones. What do we actually need to do and when? Right now, we're in FY26, then we have FY27, FY28, FY29, and the 30. Whew, we're getting to the end of the page. We know where we are now. Let's make an assumption. Let's just say we're doing 2 mil here, and our profit's reasonably consistent. Then we want to double next year to get to 4 mil. Then we want to turn it into 6 mil, slow that double, but have 50% growth on the way through. 6 to 8 mil to 10 mil. It's a nice consecutive flow. We're going to maintain our profitability on the way through. We're going to do that by forecasting and tracking our KPIs. But we can be sitting here thinking, there's some things that I want to do. You know, the business has just cracked 2 mil, and there's some real tangible goals that I want to achieve. There's some things I want out of my business that will indicate and validate that I'm building what I truly want to do. Let's start with your time. Right now, you could be working 60, 70, 80 hours Let's use 60 for whole figures. We're not flogging ourselves too hard, but it's more than we would like to do. When we think about next year, maybe we're going to set ourselves a target to work 50 hours. The year after, maybe we're going to set ourselves a target to work 40 hours, and we might maintain that consistency on the way through. When we think about how much time we have to invest in the business, this is going to have a direct correlation to our profitability. Do we want to work ourselves harder and wear multiple hats, or do we want to work less and share and delegate multiple hats? Time is one component. Then there's some real tangible elements that we can see. Maybe we want to move into a warehouse. Then we might want to develop the brand. Really lean into developing the brand. And if we're thinking about going from $4 to $10 million, we're probably going to have to put a fair amount of effort into developing that brand. And there's a whole range of systems that we have on the back end through lead generation and through social media that we can use to enhance that. We might have some other tangible or deliverables. We may want to bring in middle level management. Then as we start to lean towards 8 mil, we might look to bring in execs. And by the time we get to FY30 and we hit our 10 mil goal, we might want to turn ourselves into a shareholder and become the investor of our business. Grab yourself a piece of paper, identify out the years ahead, track out our revenue of what we want to achieve and what we think is a reasonable process forward, what kind of time we want to work in the business. This is entirely up to you. And what are some of the tangible deliverables that could happen over the next few years that would validate that we have achieved our $10 million goal with the things that we want along the way. You could absolutely as well include your personal income in here. This is a great opportunity just to map out, what do I want? What do I want to do? What do I want to have? Now, let's think about our org chart. So we've come straight out the gates pretty hard. We've looked at your mission and your milestones, and you've started to take some notes. I think you've got a reasonable understanding of really where you want to go, what kind of life you want to build for yourself. We've picked apart the where and the what, but now we need to think about the who. And we're going to go into two different areas when we talk about org chart structuring. Firstly, we're going to break apart a little bit of unit economics just so that we can see how big does the team really need to be. And what you're going to do is you're going to look at the past quarter revenue, and let's note that down of what that dollar figure is. Then we're going to look at how many FTE or full-time equivalent staff members we had working during that period. We could say that last quarter we did $1 million and we had 10 full-time equivalents working through that period. That means that each of our team members can produce $100,000 per quarter or $33,000 per month. I'm going to make this a little bit easier on our math, and we're going to draw this conclusion to say that every person in our team, these are our billable staff, our technicians on site, can produce $30K per person per month. So when we think about our $10 million empire, how many people do we need in our team? If we do $30K per person per month, and we want to do $10 million, we're going to need to do circa $850,000 revenue per month. I'm going to take a calculator out to save us all the hassle of the math. If we're going to do 10 mil divided by 12, we need to do 833,000 per month. We're going to divide by $30,000 of revenue per person. We need 27.7777 people in our team. We can't do a 0.7 of a person. We're going to need 28 techs. This is a good starting point for us to think about how big does the team need to be and what is the managerial and leadership requirements to lead that many people. We're going to start with a title at the top, and that title is the date of our mission. It's FY30 org chart. We're going to think with the end in mind, as we often do, and then we can break it down into year upon year to see what those individual year milestones need to be and to see what that org chart might look like. But we're going to start with FY30. Let's see what we come up with. As we put this chart together, we're going to start with an MD, Managing Director. This is you at the top. Now we need to think about, as we've looked at our mission earlier and our milestones, there were some people that we wanted to bring in the team, and we also want to think about what kind of job do we want to build for ourselves here. If you hate estimating, we're going to need an estimating team. If you hate leading, we're going to need some leaders in order to run the team and run the day-to-day. If you don't like finance, let's not build a finance job for yourself. So let's have a look at some of the core people that we're going to need in this org chart. There is going to need to be admin. And these could be 2 different roles of accounts and resources, HR. When we come down a step further, we're starting to think about the sales function or our pipeline. Who's going to be filling that pipeline? And we are probably going to have an estimating team or a senior estimator of some description. Now, what's the most probable scenario here is we have one lead estimator who runs in our office. This is our onshore team member, and we might have multiple estimating VAs in our offshore team. This enables us to get a little bit more leverage from our estimating and keep all of the communication for our sales function, our pipeline, driving through one person. Now that we have our back end kind of covered, we need to think a little bit more about the front end. Who are the people that are going to run 27 or 28 team members? We are going to have a project management team. And you'll notice here, I've drawn 3. The reason I like to have 3 project managers, and you can have more, but I like to build a company, particularly when we're looking at 10 mil, to go at least 3 project managers. Because if you have 2 project managers, we'll rule this guy out for a sec, when one goes away on leave or one is sick, one project manager has to pick up 100% of the work. Whereas if we have 3 project managers and little Jimmy PM manages to fall sick or go away for his 4 weeks of holidays, 2 project managers can pick up Jimmy's work. Makes sense? So if we start to think in not only the reality of what's going to happen, people are going to take holidays and people are going to have sick days, but also what it means to you. If you had just 2 project managers, you can bet your bottom dollar who's getting drawn back in to be the 3rd person or to be the 2nd person if we only have 2. So let's base our assumptions on 3 project managers. And now we're going to build out our site team. And we could have several leading hands to run 28 team members. They're going to be in crews of 4, 5, or 6. And you and I both know that they're not perfect crews. It depends on where the sites are, what's scheduled, who's away, who works best with who, and how big the project is. But nonetheless, when we're org charting, it's just really nice to see that full house of our 28 team members. Now, I'm not going to waste the time to draw them all out. I think you get a good understanding of the representation of how an org chart looks when it's dated. We know what we need to achieve, and we know the people that we want to have within the organization. Now we can shift our attention over to say, what does this mean in financial terms in order for us to achieve this mission? Let's take a look at forecasting. All right, we've got a blank page. You guys have probably heard people talk about like love languages when they're acts of service or words of affirmation. Well, my friends, my love language is forecasting because the numbers don't fucking lie. Let's take a look at what it means for you and how you can apply a forecast to your own business in order to achieve that mission we've set out. A forecast is nothing more than a month-on-month profit and loss for a financial year. We're going to keep consistency here and talk about FY30 forecasting. Now, many will say, and even my accountants along the years have said, Sam, we don't have enough data on your business to put together a forecast. Well, that is absolutely fucking poppycock, because we have some data that we can call upon. And when we think about putting together revenue targets, when we think about putting together cost of sales and gross profit targets, and when we think about operating expense and net profit targets, there's some numbers that we can actually calculate here. If we think about earlier, we said that to do $10 million, we would need 28 people in our team. That's 30K per person per month. If we're to really unpack that a little bit further and think about where we are and where we want to go, we know that we can't just bring on 10 people in the 1 month and jump from however much our revenue is, let's say it's 500K, straight up to 800K. We're not going to add $300,000 in 1 month straight off the bat because we can't recruit that fast. So when we think about projecting out our revenue for the months ahead and for the preceding years from where we are to that FY30 mission, recruiting has a huge driving impact. And if we think about some of the patterns I see within the industry, most often through most trade businesses, we can recruit one person every 8 weeks, which usually means we can increase revenue by 30K every 2 months. Now, if you are to quickly sum this out, you might be able to see and use a bullshit detector. Can I get from where I am to where I want to go within this 5-year period or 4-year period? Am I being realistic? Do I actually think I have the capacity to recruit people in this timeline? Or do I need to improve my recruiting function in order to make my forecast come to life? I told you this is my love language. We're going to go on a couple side quests today, but I want to make sure that you understand how to put the forecast together. So I'm going to try and stay on track. I said earlier, our forecast is nothing more than month-on-month P&Ls for the financial year. We can assume that this is 12 months. I'm not going to draw them out because my table is not big enough. Now, we're going to have our revenue of exactly where we are, and our revenue is going to increase, as we've said, by how many people we can recruit in that next month. Our revenue might step up by 30,000 or our revenue might step up by 60,000, depending on whether we can recruit one person every month or whether we can only recruit one person every 2 months. If you have a fundamental recruiting problem, you might only be able to grow $30,000 per quarter. This then pushes back when you're thinking about what systems do I need to learn within the business? What are my current bottlenecks? What are my constraints? We're thinking about this and going, where do I want to go? Where am I currently? Am I able to get there? If I start projecting this out into the future and I cannot grow revenue fast enough, we need to invest some time in our recruiting. So we can now project out what revenue we want to do for the future. We can also grab from our profit and loss our cost of sales. And we're not going to use whole figures for our cost of sales. We're going to use a percentage of trading income. What you'll need to do in your Xero or your QuickBooks account is turn on percentage of trading income in your P&L. You are always going to be using accrual basis accounting. And we're going to extract out what is my materials, what is my billable wages, what is my super, and what is my subcontractors as a percentage of trading income. This then becomes a formula month on month. So as you increase those revenue targets month on month, the formula autofills what our materials, wages, super, subcontractors, and anything else related to our cost of sales. We're starting to put together a formula. One of the driving pieces of our forecast is our gross profit. We are going to subtract our cost of sales from our revenue to leave us with a gross profit. We can display this in dollar figures and percent. And I know we're jumping quite deep into it and starting to talk about formulas. I've got the exact template for you to use. All you need to do is comment template or shoot us a message on Instagram and we can hook you up with the exact template. I don't want you getting bogged down into formulas and reinventing the wheel. I want you to understand fundamentally how this works and then use the shit we built for you. Let's move on. We've got our gross profit. It's auto-calculated because now you're using our template. Then we're going to put in our operating expenses. These can be done on a fixed price or on a percentage of trading income. The reason I say if and or is because some things won't increase as revenue increases. Your internet for the office is not going to increase as revenue increases. However, your advertising might increase and might be a requirement to increase in order to see those driving increases in revenue as well. This is up to you to determine whether it is going to be a fixed price budget for your operating expense or if it needs to be a percentage of trading income. Some things also will step in price and won't be a percentage of trading income, but also won't be a fixed price. There'll be a step. So if we go from 10 staff to 20 staff over the space of a couple years, we're going to add more vehicles. And with every vehicle we add, we're going to have to fill those tanks up with fuel. So we might find that every 3 months we buy another vehicle, but we also add $500 or $600 or $1,000 of petrol per month to that petrol account because it's increasing with the number of vehicles we purchase. See how there are some that will step over time. Now we have what we call an operating expense margin. We can have this in a total sum of a dollar figure. We can also represent this in a percentage. We have a gross profit percentage target now and an operating expense percentage target that we can work towards. Now, all of us have been thinking and chomping at the bit as to how we can construct net profit. How do we actually drive the business forward to make sure that we can make the money that we want? Our net profit, as all good margins, are going to be reflected in a dollar figure and a percentage. As we put this forecast together, there are multiple sheets and multiple pages, but in order to keep this as simple as we can for you, we are going to have our wages, our materials, our super, our subcontractors, and any other of our cost of sales formatted in to increase as the company increases, as our revenue drives forward. Our operating expenses have been budgeted out as well, and we will be given a net profit. We will be able to see as we hire, as we bring new people into the team, and as the revenue grows, what happens to our net profit. When we're thinking about the org chart exercise that we did slightly earlier, we added in some of the people that we would like to have. When we put this out into a forecast, we can then space out and say, we want to hire our first project manager here. We want to bring that estimator on here. As we put these into our formulas on our driver's sheet of our forecast, we will then be able to see, does this leave us with a positive or a negative net profit? We can now make educated bets and an educated guess as to what effect will making these hires, making these large investments have on our profitability. Are we happy? Are we comfortable? Are we willing to live in the green or the red in order to bring some of these big moves to life? This is where the forecast really comes into action. This is the power of it. We are now mapping out the big moves that we want to make and what effect that has to our bottom line. For those of us that have a strong appetite for risk, you may want to bring in some of these heavy hitters earlier because they may validate revenue increasing faster. You may also find that profitability is heavily escalated. You might be doing 30, 40, 50, 60% net profit because you are wearing the role of several people. We might find that to make your life better, we start to bring some of these people in order to use some of that net profit to reinvest that profit into building the life that you want so the business can grow without you. This is Forecasting 101, and we've got the templates for you. Let's move on. We've shot up some pretty big frameworks. We've set a very audacious mission, and it's not unreasonable to think that that can come true based on the forecasting efforts we've done. We've now put the numbers together to produce exactly what we need to achieve. Now, we're going to work on key performance indicators, KPIs. There's a very simple framework for us to think about when we look at KPIs. There's really three departments or three sections within the business. There's our pipeline, there's people, and there's profit. But you and I are both reasonably educated business owners and somewhat sophisticated. We're going to add a layer of detail so that we can extract out what KPIs do we need to track in order for our forecast to come true on a monthly basis so that we can tick off our milestones so that our mission becomes a reality. Let's take a look at the different business departments. Our first department is marketing. We need to attract attention, and then once we have that attention, we need to be able to convert that in our sales department. From our sales department, we've now converted that attention and we actually need to do the work. This is where we head towards operations. These are the systems and the processes in order to maintain efficiency and maintain our service standard so that our brand reputation stays intact, but also so that we can deliver projects on budget. We have our marketing, our sales, and our ops. We also need a team. People to deliver the work, and it's not you. This is people to deliver the work throughout all stages of the business, thinking about that org chart, whether they are billable or non-billable team members. We have our marketing, our sales, our ops, our team, and our finance. This is where we track those margins, bringing in those KPIs from our forecasts. You're thinking, Sammy boy, there's a spare spot here. There absolutely is, and this is our strategy. If I can spell strategy correctly, this is our strategy. When we think about strategy as a standalone piece, this is exactly what we are doing here in this training. We are thinking strategically about the 5 core departments within the business. Let's unpack some very standardized KPIs for each of our business departments so that you can begin to track some metrics, and these are the most common ones that I see. When we think about marketing, as far as key performance indicators go, we need to ask ourselves one singular question. If we were to only track 1 or 2 data points, how would we know that our marketing function is working? What are the 2 things that we could track to work out and understand at a snapshot that our marketing efforts as a whole are working? Now, when we think about our marketing, what do we really want to happen? Yes, we want our following to grow. Yes, we want people to respect our brand. Yes, we want to be a desired company to work for. But at its absolute root, what do we truly want to happen within our marketing department? And I would actually urge you to think that it's probably request for quote. Because if we think the whole reason we're spending money on marketing is to drive that attention and bring it into the company, request for quotes is a dead giveaway that our marketing efforts are working. It also takes into account repeat customers and new customers because it is just total requests for quotes. Now, if we just had number of requests for quotes as a standalone KPI, would that validate that our marketing efforts are working? And does it need to be number of quotes or does it need to be value of quotes? Because if we were tracking number of quotes and we had sent 5 quotes and our revenue target was $1 million and they were 5 $1 million projects and we won them all, we would hit target. So we need to think about our dollar value of quotes sent. How many requests for quotes did we get? We need to think about the dollar value of quotes sent along with the number of quotes sent. This gives us a really, really good indication as to the efforts of our marketing and are they working. What is the total value of quotes sent and what's the total number of quotes received? With these 2, we can make some validation around what's actually happening in our marketing. Did we change our messaging and that caused the number of quotes to increase and the total value of RFQs to go down? Or did the inverse happen? Are we now talking to the right customer where we don't have to send as many quotes and the value is larger? I'd urge you to think about, when we're talking KPIs, what are the 2 numbers that we could track within our marketing department to validate that all of our efforts are working? You'll notice that I didn't say cost per click, cost per lead, ad spend. They are all trickled down. They're the numbers that we do track, but they are not key performance indicators. They are just data points that we could dig in to get a larger picture within that department. Let's move on to sales. We've now got enough attention and we're sending enough quotes, but what about converting those quotes? The main number we need to track is quote conversion. How many quotes do we convert and what does that look like as a percentage so that we can see, is our sales function working? Now you might be thinking, Sammy, I don't have a sales team. What am I supposed to do here? You can still track your quotes sent versus your quotes won to give you your quote conversion rate. This is now your quote conversion rate. If you have a sales team, you'll be breaking those up into individual conversion rates, and you can also bring those together to go a company-wide conversion rate. Now, conversion rate on its own is one thing, but you could have 100% conversion rate and only win 1 quote and fall seriously short of our revenue target. So we need to have the value of quotes won as our secondary. We have our primary conversion rate and our value of quotes won. We can see by our value of quotes won if we are anticipating to hit our revenue target. We have now solved for how do we know our sales function is working. We have a conversion rate and we have enough quotes won in order to validate us hitting our revenue target. We've got attention and we're converting attention and we're tracking it. What about our operations department? What are 2 driving numbers within our operations department that will validate that all of our operations work, all of our on-site work, all of our systems and processes around deliverability are working? And remember, we've got to pick 2. I would argue that the most important, and across almost all businesses, is our gross profit percent. How efficiently are we delivering our work? How well are we pricing? How much work do we have in? All come into play with our gross profit. And secondary to gross profit, because it could be manipulated. We could drive gross profit and leave it as a standalone KPI and inspire the team to hit gross profit targets. But what could happen is they could shortcut some stuff. And we don't want to build a scalable business that comes out with a detrimental reputation. We don't want the guys fucking around on site to drive GP without us measuring what effect is this happening in the marketplace. This is where we go, customer satisfaction, or C-stat. We want to measure our customer satisfaction along with our gross profit. This could be through reviews, surveys, or any other way you can bring information out of the customer in order to validate that we are doing better than we once were. If our reviews are going down, if our customers' feedback is going down and our gross profit is increasing, we can then push back into our deliverables, into our systems, into our checklist to see what is happening. Gross profit on paper is increasing, but our reputation is decreasing. As we scale the business and we think about a $10 million empire, we want to increase or maintain at the very least gross profit and also improve our reputation as we scale. These 2 are some of the most important KPIs we can track, and they certainly are the most important for our operations function. Now we get over to team. Team is an interesting one because when we track KPIs for our team, it really depends on what you are trying to get out of our team department. What is the purpose? What are we trying to solve for? If we have to recruit heavily in order to achieve our targets, then we're going to need to bring in something along the lines of a recruiting timeline. This could be number of qualified and number of apprentice required in that period in order to achieve target. And second to that, we can't just heavily recruit and not think about the people that we have in our team. You and I both know that if we just recruit fucking anybody to hit target, we're going to build a business that we do not want to be a part of. And I'm in the business of building businesses that we love, not that we hate. So we need to measure our EMP-SAT, or our employee satisfaction. Not dissimilar to measuring our customer satisfaction. As we scale the business and you become layers and layers and steps away from site, we need to make sure that your team are satisfied and happy and are willing to stay with us in the long haul. We're going to get to some retention tactics in a little bit, but now we have some data points to track. How many people do we need in our team, and how well are they enjoying, or how satisfied are they within our business, and what can we do to improve that? We have our marketing, sales, ops team, and what about finance? We haven't spoken a great deal about the finance yet because, well, the numbers are pretty straightforward. We need to track revenue and net profit percent. Without those 2, we won't be hitting our revenue target and we won't be making the money we want. So, this is how we put together KPIs for our business. Start taking notes. This is what we need to track in order to build a $10 million empire. Fuck, we're going deep today, boys. Okay, the final piece of the puzzle. Set our mission, our milestones, we've got our org chart, we've got a forecast so that we know the numbers, we've got KPIs that we've extracted out from the whole process to know exactly what we need to track. Now, we want to keep the people. Let's talk about a couple retention strategies. Now, before I lose you on the term retention, this is just about leading the people the way they need to be led. And when we think about leadership, you could read 100 books and listen to a million podcasts talking about absolute bullshit. When it comes to leadership, there is only 2 components. It's managing expectations and having difficult conversations. And I'm going to draw a line right down the middle of the page, and we are going to firstly manage expectations, and then we are going to structure a framework for us to facilitate difficult conversations. We could probably use the term constructive conversations because they're not always going to be difficult. Let me explain. The 2 components that we're going to work on are job descriptions and performance reviews. And I'm going to give you a very simple framework for you to put both together and roll them out straight away. And before we do build them, just remember, I've got some custom GPTs that can help you build your job descriptions and also structure these performance reviews. If you want them, shoot us a DM on Instagram. They're probably going to be in the show notes below if we get around to it. So, managing expectations. We've all seen job descriptions that are laid out with keywords of teamwork, ability to work autonomously, good communication, blah, blah, blah. It's absolute fucking bullshit. What we need in our job descriptions, first and foremost, is a purpose. In 1 to 3 sentences, what is the purpose of the role? If you can't describe what the role is in 1 to 3 sentences, we're not very clear on what it is. Second to our purpose, we need to have 3 to 5 core deliverables, because the team member needs to know what are the most important things that they can work on. What is their job? What do they actually have to deliver in order to bring this purpose to life? I pick 3 to 5 because it's easy for the team to remember. If we have 100 core deliverables, they're never going to fucking remember. And there's 3 more components that come into this to idiot-proofing a job description. They are what actions and behaviors need to be taken on a daily, weekly, and monthly basis. And these can be as simple as dot points. You need to arrive before the technicians on a daily basis. On a weekly basis, you need to do vehicle checklists. On a monthly basis, you need to prep for your managers and operations meetings. We can be very, very specific about what we want in these job descriptions. When we're finished here, we now have a document that outlines why the role exists, what are the core deliverables of the role, and then what are the behaviors and actions that need to be taken across an entire month, broken down into actionable steps. This is how you put a job description together. I don't want to see teamwork and communication because they're left up to interpretation. We are specific about what we want. We're specific about how the job looks when it is done correctly. And this is where I see a lot of people falling short. They have a job description to some degree. They've tried their very best to manage expectations, but they've failed to seek feedback on it. There is no follow-up. There is no communication. There is no check-in to see how they're actually doing in this job description. Are we living up to expectations or are we falling short? Is there a discrepancy between what you see as a leader and what the team member sees from their own perspective? A performance review is nothing more than aligning 2 perspectives so that the team member can deliver their job description as efficiently as possible. Let's break apart the anatomy of a performance review. You will have company values. You probably have 1 to 4 company values. These are individual statements that say what behaviors we expect, and they help the team members to make decisions. If we think about Build Clean, some of the core values are fucking smile, because as a construction cleaning firm, every day is handover, and we acknowledge that every day is going to be stressful. Core value number 1, fucking smile. The team need to be positive, but this terminology changes it into something that is palatable and understandable. Second, own it. Third, go the extra. And fourth, use your noggin. They are very obvious as to what they're explaining. Now, the reason we have core values for our performance review is our review frameworks are set into 4 parts. If we imagine this as part 1, this is value number 1. And we could say this could be own it. You will have in this section probably somewhere close to 10 to 20 questions that are derived from the job description, that are based on the core value and are traffic lighted for the team member to not only evaluate themselves, but also for you to evaluate them. Let's use an example just for one. If the core value is own it, this is about doing the best they can within the role. And this is about thinking, what do I do when nobody's watching? If we then go, well, how do I pick some questions to derive out of my job description into my performance review, which tick core value 1, we could go back to our daily, our weekly, and our monthly tasks and go, vehicle checklist from our weekly tasks is something that falls under own it. And we could structure a question that says, I always check and complete my vehicle checklist. And they can give themselves a green, a yellow, or a red rating. If they're constantly failing to do their vehicle checklist, you'll notice that they're always in red. Now, as we said just a moment before, the team member will do a self-analysis. You will also do an analysis of them. When we bring this performance review framework together, you'll have 4 blocks of core values, or if you have 5 core values, there'll be 5 blocks. There is a range of questions in here, and you'll have your document, and you'll have their document, and the conversation or the actual review is not about filling out the answers, but it's about the communication that happens in between. So you have yours, they have theirs, and we have a discussion or a meeting, a performance review, to talk about inconsistencies. If you both rated this red, then you guys are going to have a talk about getting that up to green. If you rated this as green and they rated it as red, you're going to have a talk about why there's a discrepancy. What do you see and what do they see? This is how we align expectations together so that we understand not only from our perspective, but from the team member's perspective, to enable them to perform as best we can in their role to achieve the job descriptions that we've set out. Bringing these together in our org chart enables us to build a scalable model. I know we've gone really deep here today, team, but we've unpacked a timeline to build an 8-figure business, and we've done it all in the space, probably around an hour. All right, my friend, we started off today by identifying our mission. It's where we want to go, and we put some numbers together. Then we unpack that mission into milestones. What are the objectives that we actually want to achieve? We've thought about the people that we'd like to bring into our business to structure our org chart appropriately, to enable us to live the life that we really want to live. Then we've taken these thoughts, these goals, these intangibles, and we've brought them into a forecast where we can actually track our numbers on a monthly basis. Not only that, we've extracted out KPIs for each of the core departments within the business so that we can measure on a monthly basis how well we are tracking to our forecast so that we can bring our org chart to life, make our milestones come through and achieve our mission. And we've spoken about some retention plays. How can we drive accountability through the business? But it doesn't stop here. There are a range of tactics and systems required to get to that $10 million mark. And this area here is what we do in the boardroom. If you want to know more, click the link below and get in touch.